Looking to build a profitable trading strategy? You've probably heard that backtesting your strategy is essential to ensure it's profitable. While this is great advice, there are some pitfalls that many traders overlook. These can be the difference between a winning strategy and a losing one. We've talked to numerous traders who do exceptionally well in backtests but struggle to make a profit in live markets. In this video, I'll explore the drawbacks of backtesting that you need to consider when developing a trading strategy. Let's dive in. Backtesting is crucial for building profitable trading strategies. It's hard to become a successful trader without thousands of trades under your belt. Normally, this would take years to achieve, unless you backtest and simulate thousands of trades on historical data. Backtesting helps you build an edge in the market and improve your skills. However, it's often done incorrectly, and we've seen many traders with excellent backtest reports who fail to profit in live markets. This isn't just because markets are always changing. Often, the strategy was never profitable to begin with and just looked good in the backtest. Let's discuss the key aspect of backtesting and some of the things that you need to watch out for that you might have not considered. One major issue with backtesting is the quality of your tick data. For those of you that don't know, tick data accuracy refers to the precision and reliability of financial market data that records each individual trade or price change. So pretty much the data you have available in your backtesting software. High tick data accuracy ensures that for every transaction, including the exact time, price, and volume, is captured correctly, providing you or the analyst with granular and, most importantly, accurate information. Many backtest reports from platforms like MT5 show a tick modeling quality of about 90%. With this level of data, your results could be actually misleading. It might sound pretty high, but I would recommend using at least a 99.9% quality tick data. Though it can be a bit pricey and harder to obtain, it is definitely worth considering that sort of price to performance ratio when choosing your backtesting setup. Another thing that you might not be considering in your backtest enough is human bias. If you are backtesting a manual trading strategy, human bias can distort your results. You might skip trades or take ones you wouldn't in a live account. Emotions play a huge role in manual trading and can lead to bad decisions. For example, you might take a trade that doesn't meet all of your criteria during a backtest, but hesitate with real money on the line, or vice versa. For intraday traders and scalpers, considering spreads, slippage, and commissions is absolutely crucial. Many traders forget to include these costs in their backtest, making their strategies look more profitable in the backtest than they really are. In live markets, these costs can turn a profitable strategy into losing one. I know it can seem pretty obvious, but you wouldn't believe how many people actually forget to check this. So make sure that your backtesting software lets you set these variables and use them to get a more realistic picture of what your performance will be. Another major drawback, or maybe wouldn't even call it a drawback, but it's just like a thing that the backtesting doesn't always consider, is curve fitting. After a backtest, you might make many small adjustments to improve results, like avoiding trades in certain months or certain situations. And while tweaking a strategy based on backtest data can be useful, too many changes can lead to over-optimization. This means that your strategy might perform well on historical data but poorly in live markets. You pretty much fit your strategy to fit, or you fit the strategy to fit a specific historical data perfectly, and it's going to work perfectly on that. But if you're bringing it into the live market, it might not work anymore. So something to consider, something to definitely watch out for, that you don't overdo this. Many traders think that 100 trades are enough to validate a strategy. This isn't necessarily true. A larger sample size is needed for confidence. Data analysts would likely argue that 50 data points are generally considered the bare minimum for an initial statistical analysis, but that is often insufficient for any robust conclusions, especially in financial markets where variability and complexity are incredibly high. They recommend a larger sample size, ideally several hundred to thousands of trades, to ensure the results are statistically significant and reliable. Having a larger data set helps account for market fluctuations, reduces the impact of the outliers, the really profitable or really losing trades, and provides a more accurate assessment of the trading strategy performance. I would recommend getting as much data as you can as possible, and remember, a strategy that looks profitable over 100 trades might not hold up over 1,000 trades. Another common shortcoming of backtesting is the lack of emotion. Manually backtesting with subjective rules can differ from live trading due to emotions like fear and greed. These emotions are muted in backtests but can significantly impact live trading results.
Emotional, damn it!
It takes time to manage emotions in live markets. At Lux Trading Firm, we coach our funded traders to detach from their emotions, but this is a skill many struggle with. So the big question is, should you backtest your strategy? Yes, absolutely. You should still backtest your strategy if you're serious about becoming a profitable trader. Despite its drawbacks and shortcomings, backtesting is the best thing we have. And it is the best way to get experience and build an edge. Just be sure to consider the issues we've discussed today and mitigate them during your testing. So even though backtesting has its flaws, it's not pointless. If done correctly, it can actually fast track your journey to becoming a profitable trader with effective strategies. Mine has been Oliver. Thank you for watching and have a great one.